Hi, I am Apurva Sheth and I welcome you to this episode of The Right Choices with Oracles of Dalal Street. Now, today we are recording this episode from our homes because of the pandemic. But we will not let this pandemic stop us from curating actionable insights from real world stock market heroes. And today we have one such stock market hero with us. Now, do you believe long term investing really works? If you don't know the answer or have any doubts, then I'm sure that after watching this episode, all your doubts will be cleared. Our guest for today is one of Samco's HNI clients, and he is a flag bearer of long-term investing. Some of the stocks that he have bought in his portfolio were bought more than 20 years ago, and he continues to hold these stocks even today. These stocks have generated returns of 5,767%, 11,300%, and 37,400%. Now I'm sure that this episode is going to be excellent and insightful, so please watch it till the end. Now our guest for today is a partner at an insurance firm by profession, but he's a long-term investor by passion. Recently he's also started investing in foreign stocks. Now apart from markets, he likes to play cricket, tennis, and he also likes to travel in his free time. So without much ado, let's invite Mr. Khushal Jhaveri to our show. Welcome to the show, Mr. Khushal. We are pleased to have you over here.
Thank you, Apurva. Thank you for having me.
It's our pleasure to talk to you. Now, I'm eager to know about the stocks that you have been holding in your portfolio for such a long time. But before we get into that, let me know a bit more about you. Let our audience know a bit more about you. So I know that you have done your engineering, and after that you have also been to IIM Ahmedabad for a MEP course. So can you share some details about it and how these have influenced you?
So engineering is something which I did, after my 12th standard, and mechanical engineering because I, as a kid, had a dream to set up a factory. When I look at it now, that time I had a dream to set up something like a Tesla. But then I soon realized that it's not my cup of tea, that I could set up a factory. But I always thought that one day I will set up a factory, employ thousands of people, and manufacture, export across the world. But I soon realized that it's a very, very difficult task to do manufacturing, and the skills were frankly not there. And then over a period of time, Indian economy was opening up, and insurance sector was opening up. So I was introduced to this sector, and I thought, engineering is only a mindset, and engineering training trains you to do various things. Makes you more analytical in thinking, more persevere in managing what you want to do or study. And that's how I got into insurance. And then over a period of time, I did insurance, reinsurance, and then we have a company called Unilight, which is basically into reinsurance and insurance, and we specialize in certain segments of insurance. So that's the journey.
So actually, your dream was to set up one factory, but because you are an investor, you can probably have hands in 50 or 100 stocks, and you can be indirect owner of all these hundreds and thousands of factories which are there. So actually, your dream has come true.
I think you put it really, really well. I've not thought about it in that manner, but yes, that dream to run a business, dream to run a factory, manufacturing. I think, by holding this company for a long period of time, thinking like an owner, that dream. You are right. I mean, I never thought like that, but yeah, thank you.
So now let's talk about your first steps in investing. I know that your father had an office near Bombay Stock Exchange, and you were always pretty close to the action. So how was it growing up, looking at the Sensex and the markets so close by?
Yeah, so I was quite lucky because we had an office at a road called Nagindas Master Road. So this road actually leads you to the Dalal Street, and so it's just 3 minutes away. The Bombay Stock Exchange is only 3 minutes away from my office, and those were the days when there was the action in the ring. So the markets would close down, and then the brokers or the sub brokers would then start visiting their clients. So we always had visitors as sub brokers who would come to our office, and depending on the market, they would either advise on stocks, etc., with whatever news. So I have seen the Harshad Mehta bull run. I have seen Ketan Parekh. I have seen the falls in 2000, etc. So being close to that market, being close to people has helped, and also it helped in identifying investors who had a different thought process, who thought differently from what a broker would think, and that you can say that chemistry or that mixture of being close to so many people has actually helped. So when you are young or when you are a kid, you don't know how this is going to lead to, but I can now see how the dots have all joined together.
Sure. When you were starting, your father was a investor, and that's how you also got into investing. So, how was the transition from your father investing in stocks to you investing in stocks, and how did that affect you, influence you?
So Apu, I will take you to a little bit of history that I have. You know, my grandfather was in Ahmedabad, and he was a very important stockbroker in Ahmedabad. And the wealth that he had built from stocks, he Sardar Vallabhbhai Patel had told him that he should use that wealth to give back to the society. So in Ahmedabad, there is a hospital called VS Hospital. It's a municipal hospital now,
Yeah.
and he set up this hospital in Ahmedabad because Sardar Patel possibly at that time was the municipal governor or in the municipal setup in Ahmedabad. And then my great grandfather also set up a hostel in Bombay because that was the time when students from Ahmedabad or Gujarat would come to Bombay. They would finish their education, maybe stay. So he set up a hostel in Tardev. But I do remember I've been told that, eventually in the 1932 crash across the world or the massive recession that we had in 1932, they were totally wiped out.
Okay.
So I have seen immense wealth which was generated and used for public good, and I've also seen that the wealth was totally wiped out. And then so that's the history. And then my father, whatever money he made, he was quite comfortable buying stocks. So there was no concept of asset allocation. He believed in companies. He had reasonable reading of companies, and he would invest whatever he made after we lived a reasonable life and invested that money in stocks.
So yeah, so having seen the wealth that was created, like he was pretty open-minded to investing the majority of his investment in stocks, and that's how the family history of investing in stocks continued.
Yeah, so obviously that time we had very tiny amounts of money. So so it was tiny investment, but yes, but I can definitely say whatever he could generate surplus was invested in high quality stocks.
Okay. So, on the topic of high quality stocks, now the stocks which I spoke earlier, the returns which I spoke about earlier about the stocks were Titan, which generated a return of 37,400% for you. Honeywell Auto generated a gain of 5,767%, and HUL is close to 11,233% right now. Now, tell us something more about these stocks. What was the year that you had bought them, and what was going on in your mind when you had invested in them?
Uh, I don't think anybody needs to have any clue on investing in HUL because it is a company's products which we use,
On
almost
a
every
day-to-day
single day.
basis.
So even somebody who doesn't understand reading balance sheets, etc., can buy an HUL. So if you look at Titan and HUL, you could see that you don't really need to understand balance sheets of companies to buy these companies because Titan at one point they came out with watches. There was zero competition in watches. It was an unorganized market, and then eventually they came into jewelry retail. Again, that was a market which was quite unorganized. People didn't have 100% confidence in what the jeweler was offering. So those were businesses which didn't require too much of you know you can say analysis to buy. What was required is to understand that whether these business, and again, the management quality in those businesses was phenomenal. So HUL, you well know the quality of management over decades have been phenomenal. And Titan being part of the Tatas, the Tatas could provide quality management. So I think that was the key, that this their products would be required in India for a long, long period of time. And if India was to grow, these companies would definitely keep growing. And Honeywell, is like an Amazon in those times, because the technology that Honeywell had, nobody else had. So while there was consumer at one end, there was technology at the other end, and combination. So that's how we thought
So
these are great
I'm
companies to have.
assuming these stocks were bought in 1990s or maybe before
Yeah,
that.
maybe 1990s they would have been bought, and maybe HUL maybe slightly before that.
Okay. So you have been consistently holding these stocks for so many years.
Yeah.
Now that's something a skill which I think most of the retail investors or most investors these days do not have. The quality of holding on to these quality stocks for a really long time is missing.
I agree. I can give you one more story. I mean, this is not out of India, but Walmart in America, it got listed in say 1972, and since 1972, there's only one family that has held on to the stock till date, and that is the Walton family. So in 1972, the stock price after all the bonuses, etc., they were given was like less than $1, and today it is $140.
Wow.
So yes, and then so this is what it is. The wealth that the Walton family has made out of Walmart is phenomenal, but nobody else could stay with them. Everybody kept selling. So if you do too much analysis, then possibly you may give up your stocks.
So the only word which comes to my mind is wow. And so it is the same thing with Walmart and with the kind of stocks that you have been holding. So these are all super normal profits. And I would like to know more about it. Our viewers would also like to know more about it.
But I think the most important step is to remain in your circle of competence. If you know what you understand, then that is where, if you focus on that, then you will become a super normal investor. Because if you think you know how to handle a steel plant, or you understand the steel cycle, you may invest in steel, and you can make super normal profit. But if you don't understand how the steel market globally works, then maybe you should focus on things which you understand. And if you have that kind of integrity of knowledge, that this is what I understand, this is what I will do, then you will have more and more conviction in what you buy. The problem, I think, is conviction. If you have incomplete knowledge, if you have half knowledge, then you have very poor conviction, and then you tend to sell out at the worst possible times.
For someone who does not have a very great understanding of businesses, what would be a place where he could start? So do you believe in reading annual reports or networking and such kind of things which might help people?
I think everybody has a certain skill. So if somebody who's not good at reading balance sheets or financials, he should try and identify uh, good quality people whom he should copy. So I think copying is a great, great talent. You call it copying, you call it follow. So you have to then identify great fund managers, observe them over a long period of time, or in your own company, they should identify a good analyst, follow that analyst over a period of time, and just copy what he is trying to do. So if you don't have the skills, you should have the skill to copy the right guy.
Okay. So what else apart from these? Like what were you thinking when you had bought Honeywell Auto, or what are the kind of things that you look at the company's products? So I'd like to know a step-by-step process that our viewers can also follow when they are doing long-term investing. So can you throw some light on the steps that they can follow?
Yeah, Apurva, I would think, the steps that every investor should follow is definitely take printouts of annual reports for last 4, 5, 6 years.
you have to read through those annual reports. You read through the financial statements in those annual reports. Also critical is you read the chairman's report, you read the managing director's report in that annual report. So once you have done a study of those annual reports, you know more or less how the company is performing over last 5 to 10 years.
So that would help you learn more about the business. Like in case if you don't know about the business that you want to invest in, then that's the good place to start with.
Yeah, Purva, what I think is, all businesses require cash flow to sustain themselves. So the annual report will say how good is the profitability. Because if you don't have strong profitability, where will you generate the cash to reinvest into new technology, into new manpower, in new plant and machinery, into advertisement? So the key to my mind is checking whether the company is generating enough cash flow or enough free cash, and then trying to apply that mind whether this cash is deployed by the management in the most economical manner, or whether ROI of the cash deployment is good. And then I also look at regularly their presentations, and which they make to analysts, etc. So them many times they would say new products that they are introducing, new marketing material that they may have. So then it is only a regular follow up and checking whether the company is going in the right direction or not. uh, Obviously I pay a lot of attention to the investments that they make in R&D, because the competition that we have currently is so much that companies that will not invest in R&D are going to be wiped out. So I would leave it to the management's judgment where they want to put the money in R&D. But a company that does no R&D investment, I would not be very happy to invest in those companies. So I see many companies overseas, they almost put 10% of the revenue on research and development. So I don't think Indian companies are at that level, but I definitely look at R&D. So first is looking at the annual report for last as many years as you can, read through the financials and see if there is reasonable profitability, see if they generate enough cash and that cash is invested or given back to investors. Fourth is follow up on marketing materials that they may have. I think the fifth and the most important thing is to read trade magazines. So the trade magazines have an opinion about that company from competitors, from analysts who are not related to the stock market. So there are many trade magazines that are available. So you just either subscribe to them, or you buy them, or you look at the internet. And finally, I think the internet is a phenomenal medium where you can actually do so much more research on that company, that where they are, how their management is talking, what they are talking about, are their statements consistent over a period of time. So these are the steps. And if somebody is really wanting to do a good job, then they must make a checklist. So you should have your checklist as an investor, whether you have a written checklist or it is in your head, but you must have a checklist that these are the points that I want to look. For example, some investors, or sometimes I'm not very comfortable in investing in high debt companies. Then I would say, look, this company has high debt, and it then pops up in my checklist. So then I would avoid investing in those companies. So it's like your filter, which everybody does, but you fine tune that filter depending on what you feel comfortable with.
So this is an excellent list that a common retail investor or our viewers of this show can follow while picking stocks for the long term. And one of the things that you said was really insightful, and this is something new that we are we don't listen to quite commonly, is the trade magazines that one should follow. So there you get perspectives of companies and most probably their products, and how these products are helping customers and what these products can do. So that is probably a place that you would get a completely different set of information from. So once you do that, you start to get ideas about the company's products, and if they are unique and are actually solving society's problems, then that could be a good place or good point to identify a good stock. And ultimately, a checklist is a system which could also help investor. So that is also a very good point that one could note down. So in this episode with Khushal Jhaveri, we have seen how he stepped into the field of investing. Apart from this, we also learned the process that he follows while picking stocks for long-term investing. In the next episode, we'll delve deeper into this and also try to learn what are the other things that he watches while picking stocks and what are the mistakes that he has done and learned what are the lessons from it. So do stay tuned and look out for our next episode on Saturday at 11 a.m. on our YouTube channel. And we would also like to request you to like this video, share it with your friends and family members, and help us reach at least 1 lakh people over the next few weeks and days. Thanks a lot and have a nice day.
And then there was suicide by the CEO, and then the amount of debt came up. Unfortunately, the debt could have been serviced. Told me that the key is to be focused in the area in which you want to, be the best. You need not become best in each and every